Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday the 15th of February 2020 and we're publishing our gold and silver weekly update for the week ending the 14th of February. Gold rose $13 last week from $1,570 to $1,583, having hit a high of $1,584 and a low of $1,562. In sterling terms, gold finished the week at £1,214. That's down £4. And in euros, it closed at €1,462. That's up €27. Just proving how much the euro has depreciated this past week. Silver rose 5 cents from $17.69 to $17.74, having hit a high of $17.84 and a low of $17.46. In sterling terms, it closed at £13.60. That's down 12 pence. And in euros, it closed at 16.38 euros. That's up 0.22 euros. The gold to silver ratio rose again this week from 88.7 to 1 to 89.2 to 1. The Dow Jones closed on Friday at 29,398. Down 25 points on the day, but up 296 points on the week. The Nasdaq closed at 9,731, up 19 points on the day, and up 211 points on the week. And the S&P 500 closed at 3,380, up 5 points on the day, and up 53 points on the week. Another positive week for US equity market. Brent crude closed at $57.32, up $2.85. And WTI crude closed at $52.05. That's up $1.73 on the week. The dollar index stands at 99.12. That's up 0.44 for the week and follows last week's rise of 1.29. Now, we concluded last week's update with the following words, quote, "Our best assessment is continued consolidation, and providing equity markets pick up, we can see both gold and silver struggling to advance. At this stage, we are far more bullish gold than silver, and as we stated last week, expect the gold to silver ratio to touch that 90 to 1 level yet again pretty soon." Well, the gold to silver ratio did in fact reach 90 to 1 on Thursday. And although it has fallen back 1 point since then, we can expect to see a number of breaches of this 90 to 1 level. Also last week, gold opened initially up, fell back again, and only began gaining ground from Wednesday onwards. But it is positive that gold closed very close to its week's high. Now, this is not surprising, in that the coronavirus is dominating the headlines at present, especially with the likes of the Fed, the IMF, the ECB, the Bank of England, all revealing that the coronavirus has already affected global growth and could indeed prove most pernicious in this regard. All obviously unaware as to the extent at this stage of its effect over the medium to long term. In fact, last night we published on our Richard and Greg YouTube channel, of which we've provided a link below, that the number of worldwide cases has risen to above 64,000 and that there have now been in excess of 1,384 deaths. No sooner had we done this that this morning news media has reported that there are now more than 67,000 cases, 3,000 nearly up in a day, and the death toll has risen to 1,520. Now that's almost 140 deaths. With one death, a Chinese tourist, having occurred in France this morning, being the first death outside of China. From a technical analysis point of view, gold is running close to February's highs of 1592. And we mentioned last week that January's high of 1611 will be the next major resistance point, that is above the psychological 1600 level. There certainly appears to be reasonable support at the 10-day moving average of 1568, but we place more weight at the 50-day moving average of 1535. In other words, we can see gold breaching this 1568 downwards, but will struggle to get much below 1535, at least in the short term. Now, most of the technicals point to short-term positive momentum and consolidation, so we have no need really to amend what we regard as our $100 low to high of between 1550 and 1650 over the next week or two. Now, whilst we have a long US holiday weekend ahead of us, gold's rise on Friday is impressive, bearing in mind that equities too performed extremely well for the week, and the dollar index is continuing to rise, as we've predicted throughout the course of this and last year. Now, some may argue that consumer spending being unchanged is a negative factor, and suggests that the economy is not as strong as many have predicted. This may of course be true, but frankly we feel the fear over the coronavirus is having more of an impact than that is having right now. In other words, the economic data is affecting markets, but not considerably. Not as yet. Silver is interesting in that it moved almost exactly in line with gold, though trailing, again percentage-wise. Silver is actually up on the week, 0.27%, but gold is up 0.86%. And we saw a divergence of percentages also last week, which we reported on. Now that said, silver is, though, hovering around the 50-day EMA and managed to shoot above 1750 again when for a brief spell it fell below it. There is really very little to add re silver than what we stated last week. It will be range bound, with the typical prices vacillating more or less between $17.50 and $18, and then with outliers going no lower than $17 and no higher in our view than $18.50, at least for the next week or so. The reason, though, this market is so interesting is that it can genuinely move in either direction. If the coronavirus fears dissipate, we could easily see silver fall back towards the $16.50 level and even potentially down to $16, pushing into the late 15s. If it worsens and equity markets take flight, then $18.50 silver, attempting to reach $19, is with us. So we have a potential $1.50 to $2 decline and a potential $1.50 to $2 rise. But for the moment, we are comfortable watching it play within the $17.50 to $18 level for now, unless some news comes out to upset that equilibrium. Now, economic figures reported last week were dominated by Friday's announcements, and retail sales figures came in at up 0.3% in January, in line with expectations, and 0.1% above December's figures, which had been revised downwards by 0.1%. Industrial production, although down 0.3%, was as expected, but a little positive news rests with the Consumer Sentiment Index for February at 100.9, some 1.1 points higher than expectations and higher than January's figures. Auto sales also jumped 0.2% after falling to 1.7% in December. So let's take a brief look at what economic data has been reported this coming week. Well, on Monday, nothing is scheduled because of the President's Day holiday. Tuesday, NAHB Home Builders Index for February. Wednesday, Producer Price Index for January, Housing Starts and Building Permits for January. And the FOMC minutes will be released. Now on Thursday, we have the leading economic indicators for January. And on Friday, perhaps arguably the more important day, Market Manufacturing and Services Flash PMI for February, giving us a good indication for the actual figures which will be due out shortly after, and existing home sales for January. So apart from the flash PMIs on Friday, The FOMC minutes will be of interest, and a number of Fed governors will also be speaking during the course of the week. But we are not expecting any surprises, though, from this, as we pointed out in one of our videos earlier this past week, as Jerome Powell has indicated some dovish tones during his testimony to Congress, and holding on to the brief that there will be no interest rate cuts in 2020, though we suspect there may indeed be one. So next week, we shall probably see more of the same, but with the coronavirus announcements really affecting markets most. Now, that said, it has been announced today that the dispute over subsidies to aircraft makers has escalated, with Washington imposing a higher tariff on Airbus and aeroplane parts from the EU. It will go up from 10% to 15% next month, while most other tariffs on EU exports to America on a range of goods standing at 25% are retained. Now, we're not too worried about this, as we all know that the US and EU are in the throes of thrashing out a major trade deal, and they will be posturing on both sides until such a deal is signed. Meanwhile, we can certainly expect to see a reasonable amount of political rhetoric and threats in this area. What may lift equity markets, though, and it's too early to tell quite yet, is the fact that there are signs emerging from the annual security conference in Munich that the US and the Taliban are perhaps just days away from announcing an agreement that could pave the way for peace talks between the Afghan parties themselves and the withdrawal of US troops from the country, meaning that Washington's longest ever war could be coming to an end, and will support President Trump's pre-election promise of bringing US troops home. We shall have to wait and see how that pans out. So, we expect precious metal prices to be underpinned by the coronavirus news next week, with some headwinds on both the economic and geopolitical front, either preventing an advancement or alternatively having a dampening effect should the coronavirus news improves. This past week, we've produced numerous videos on Europe and why what is going on there is so important. Last Sunday, we published our gold forecast for 2020, and on Thursday just past, we published our silver forecast within the Inner Sanctum. On the Trump for President 2020 channel, we shall be talking briefly about the Department of Justice and its involvement in the Roger Stone affair, and our overall view on the Stormy Daniels lawyer Michael Avenatti's conviction in a US court yesterday on attempting to shake down or blackmail the sports company Nike. Meanwhile, have a great weekend. Happy President's Day to all of you, those who reside in the United States. Thank you so much for listening. If you haven't already done so, please subscribe to our channel and press the bell sign so that you're notified of our videos as and when they are published. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.